Hi everyone, this is Murugan from EQSIS. Among stock traders, the option chain analysis is extremely popular. This is simply because it provides data which can reveal market expectations, be it support and resistance, directional bias, and expected volatility. And these are all extremely useful inputs to form trading strategies. But one should know how to keep it simple. Otherwise, it becomes analysis paralysis. We have hundreds of contracts getting traded in NSE, and it is difficult to review each and every one. Even if you attempt to do it, you may not spend enough time with the right ones. So how to make it simple? It's a big question, and we need to have a right filters with the right parameters, which can shortlist hundreds of companies so that we can spend time wisely. And by the way, to understand the numbers better, we need some graphical representation like this to make it much more informative. So in this video, I'm going to show you how to use the option chain filter to find the right stock. Let's begin from here. To find the option chain filter, you just have to open your browser. We recommend Chrome, but be in any browser, you have to visit www.eqsis.com. Then you find a menu called analysis. There you see derivative analysis, and you have to find option chain filter underneath. So when you get into this particular one, you see an option filter with various parameters that can probably help you to find the right stock in a matter of click. Let me do it or present you the same tool on the live screen. So let me actually take the browser first. So I have to get into the site eqsis.com. And when I get into this, you see there is menu. As I said, there is analysis, and underneath you see derivative analysis, and then I get into option chain filter. I'm talking about this NSE option chain filter. So when I get into this particular screen, it actually loads the tool which can shortlist hundreds of option chain in a matter of click. But you need to know when to use the right parameters so that you can form these strategies. And you can see this data is updated as on 22nd June 2020. And you see there is various headers: high open interest filter, at the money directional bias, expected volatility, active call filter, put filter, and so on. Let me explain few of these filters which can make even beginner to find some sense out of this particular one. So let me actually begin with high open interest filter. So you see there is an option called trading at support. So if I scroll down, you see there is a lot of company here, and there is close to 6 pages. So it runs through close to 150 companies around. But if I check on trading at support, it precisely pick up the companies which are trading at support as per option chain analysis. Let me tell you how it actually works through the illustration. So let's go back to the illustration. When it comes to support and resistance, the option chain analysis is very popular through open interest. I think most of you must be familiar about this particular screen. It is a Bank Nifty option chain. I've just taken a snapshot from NSE, and you see the left hand side with the call options and the right hand side with the put options. So when it comes to support and resistance, I think most of you must be familiar about the open interest column, and there we have to figure out the highest amount of open positions in call option versus the highest number of put option open interest. So when it comes to this one, I see 38,000 carries the highest open interest. Here 45,000 carries the highest open interest. So what matters to me when it comes to support and resistance is that particular strike price. So I'm looking at 21,000 is going to act as a downside support to me, and 23,000 is going to act as the upside resistance. But now the price is close to 22,000. But surprisingly, this is a stock which is not nearby support nor by resistance. So this may not come through any filter, but I hope you got some clarity by this time. So any stock which is trading near to its support can be identified just by one click through that particular filtering tool. And by the way, if any stock trading nearer to its resistance, I mean 23,000, then you can identify through that click. You may be surprised why this chart is quite different from resistance support, because the strike prices were sorted in ascending. But generally the market prices, we have 0 to 100 upside. So it is an inverse price chart. So don't get confused with that, but you got the fundas. I hope you got it. So let me actually show that in the table so that you can actually connect ongoing basis. So now what I'm going to do is, let me actually check this option called trading at. So trading at support. So if I click on trading at support, what happens? It presents me just 10 companies. So these 10 companies are sitting closer to its support level. So how do I talk about support level? See, now I'm talking about open interest support. So open interest support talks about the put options carries the highest open interest, and that particular strike price is listed here. So let's take LNT. So LNT 909 is the future price, but the support is around 900, whereas the resistance is seen around 1000. So it is, anyone can easily say that this is a stock sitting near to support. But finding this stock when you have hundreds of companies is difficult. But that is the core purpose of using a filter. In one click, you're getting the stock. And of course, from here, you can do a further analysis, and based on your risk appetite, you can actually form a trading strategy. But as far as the support and resistance is concerned, the first filter can actually do its job. And if you really want to know the directional bias, and that is where we prefer at the money directional bias, which is very useful to actually pick up the trades. Let me actually first, no, now I'm talking about the directional bias of this particular one. So let me demonstrate this using the illustration so that you understand the logics before you use this particular filter. So if I take that out with you in terms of directional bias, so again, I've taken the same option chain data, and you see now I'm going to focus on at the money area. So I'm just focusing on at the money area. And now I'm concerned about the premiums of call and put. Now we're going to compare. Remember, I'm not comparing the absolute numbers of call and put. Rather, I'm comparing the theoretical value of call and put and how much spread I see in between. In short, to make you people easily understand, I can say that the implied volatility of put option is quite higher than the call option. It means it shows that the put option buyers are willing to pay more over the call option buyer. So it actually tells me that people are willing to take put option, not much of call options. It means people are slightly skeptical about the downside. So it shows a kind of bearish bias. So that is the reason why I say the market is not so optimistic at current levels. And you may ask a question, Murugan, does it mean the market have to go down? No, not necessarily. I'm not trying to confuse you. Try to understand that option chain analysis can reveal what exactly the market perception, market means the other trader perception as of now. So if a lot of people were not expecting much of downside, then the market trend is a bit bullish. And in this case, you can see that the market trend is not so bullish because put option premium is quite high. This can be identified by studying various option chain. But using that filter, you can precisely look at few option chains alone. Let me tell you how it done using that particular filter. So when you have hundreds of companies here, what you people have to do is, let's take a bullish bias. So if you click on bullish bias, you get hardly 8 companies here. And by the way, if you have a bearish bias, you got about 7 companies here. So these are all the companies got a bullish and bearish bias at this moment. Okay, now let me see why it is actually a bullish or a bearish bias. Okay, now let's take a company called, you can take for that matter any company, let's say BHEL. Okay, so if you take BHEL, the future price at this moment, now I have expanded this area. So you guys can see the expand button here, kind of a plus button. You click onto it, and these data are very important to do this analysis. So I want you people to focus here now. And the future price is now 33.7. And I'm talking about the at the money of 33 strike price. So now look at this. For 33 strike price, the call options must be in the money and put options must be out of the money, because the future price is at 33.7. If you were somehow confused, better you can rewind it for a while and see it again. Okay, so but call option premiums are 0.85, I mean 85 paisa, whereas the put option prices are 60 paisa. I'm not telling you that the call options are trading way expensive. In fact, put options are way expensive. How? Because 70 paisa in the money, and we have just about 2-3 days to go for the expiry, and it carries only 85 paise, whereas the put option got 60 paise, which is in fact out of the money. So ideally it should be 40 paise or 30 paise when it carries about 85 paise. But why it is so high? So it shows that the people are willing to pay more to the put option when compared to the call option. By any chance, if you get confused, see it once, because don't compare with the absolute amount called 85 paise and 60 paise. I am talking about the theoretical value. So comparing the 70 paise intrinsic value. And by the way, if you are very new to options, I think this video may be so beyond your scope. So better don't stress much. Better you see some basics and later you guys can come to this level. Hope you got some clarity in terms of how to use this at the money directional bias. So likewise, you guys can actually see any of the companies, but you know there is only few companies. That is what available in front of you, so you can spend your time effectively. And coming back to expected volatility, see, this is a very interesting study, because I think most of us are very familiar with respect to implied volatility. So implied volatility can actually reveal what exactly the bias is all about. But if I'm talking about expected volatility, that is very difficult to judge. I also agree to that, but this gives you a clue about expected volatility. Let me actually demonstrate using this before we move forward. So when it comes to expected volatility, I've taken the same option chain data. I'm this time going to focus only on at the money option, which is 22,000 strike price I've taken. And now I'm going to focus with respect to the LTP of this. Remember, anybody buy call options and put options by paying a premium, then the price have to make significant move for that buyer to make money. And same is true for the seller. Anybody writing those call and put must be expecting the range for that. So I think by any chance, if you are someone who got bit of experience with the straddle and strangle, you must be aware of defining the range using the particular strike price. So the call premium and put premium collectively talks about 889. I'm talking about this 412 and 477. So approximate 889 is the premium one can pay or get by getting into this particular strike price. So that defines the range. So market may be around 22,800 on the downside. But meanwhile, I'm looking at the last, again, 3 to 4 days movement, because we have 3 days to expire. Okay, the expiration is on 3 days. So last 3 to 4 days, if you look at it, the market has given me 1100 points movement. So when a market got ability to move the 1100 points, how come it is now having a premium of 889? It means market is not expecting much of move from the current level. So I'm not talking about implied volatility. I'm talking about expected volatility based on its historical movement along with the current premium. So this is something which is very interesting. So I hope you got rough idea. In this case, the expected volatility is low. So like this, you guys can actually pick up this with respect to the filter. So if you really pick up something called high volatility, so you get some list of companies. Let me take the first one called Berger Paint. So if you take a Berger Paint, let's talk about it. See, now I'm concerned about the 16 rupees, which is call premium and put premium with the strike price of 500. So if anyone trading at 500 strike price, the range works out to be 16 plus 8, close to 24 to 25 rupees. So 25 rupees is a broad range. One is expecting till the expiry, okay, which is close to 4 to 5%. But the stock has given a range of only 20 rupees in last 4 days. So remember, this stock has given only 20 rupees movement in last 4 days, but the premium is even more than it. So the option traders are asking more premium. It means some uncertainty is still there. This talks about expected volatility for the near term. So I hope by this time you got some reasonable understanding about support and resistance, bearish or bullish bias, or high or low volatility. This is not going to be one-time viewing video. You can probably bookmark this video or download this video for your later reference. As you see more and more again and again, you get a different perspective. I hope by this time you got reasonable understanding of option chain filter. Be it a pro or a beginner, you can understand now the direction, volatility, and you can pick up the stocks which are trading at support or resistance. These are all the vital information to form a trading strategies. But if you really want to fine tune your observation, You can even check out the other filters which are available here, but it gets into more detail and it goes beyond the scope of this particular video. Let me actually get into the graphical representation of open interest presentation. So if I get into this particular one, so let's say if I want to take a just dial charts, I'm just clicking on the name of the company. I hope you guys can see there is some animated things happening here. Not just an animation, you see that it is actually moving from day 1 of June, 2, 3, 4, 5, 6, and you see the prices were behaving. Okay, let me quickly make some announcement here. By any chance, if you are new to EQSIS, or if you are an option trader, or if you want to master options, we have two services for you people. One, we have an online training program where you can master option trading, because we get a good number of people asking this question, Murugan, do you have a program where I can interact with you? Yes, I'm your online instructor for a whole day, and it will not be another video where you will be watching. Rather, we will be giving you a portal and give you a lot of assignment and making you to do that. So to see through various videos, it must be available through YouTube. But if you really want to master by practicing it, then you can actually get into this. But before you check into this particular program, make sure that you have some basic understanding of options. For that, we expect you people to go through the eligibility test, which will make sure that we have a common audience and it gives a good ambience for everyone to interact with us. So it will be a highly interactive portal and targeted only for a limited batch. I mean, it will not be beyond 20 in a batch. So I hope you guys can get a details through this, and every half an hour, 45 minutes, we have some discussions, activities, and we have a simulators, and we have a back testing activity, forward testing activity. So you guys can get all these details in this particular session. And the service 2, that we have the trading recommendations. So if you are someone who got some reasonable understanding, but you just want to save a time, or if you want the expert guide, we are someone who's always sit in front of scanners and we keep hitting the various option strategies. So we can pinpoint the right strategy for this week, and you can further evaluate and take your decisions further. But again, to execute this, you need some reasonable understanding or experience in trading options. It will be multi-leg options. So one should understand the capital requirement. All these details are available here. So without studying the terms and conditions, do not go or take any of our services. Our services may be priced nominal, but it offers great value to our clients. So don't judge our services just by looking at the price. So let's quickly go to the graphical representation of it. So I said sometime back, this is a very interesting presentation, because any option chain analyst must give reasonable importance to change in open interest. So if you look at this particular one, I hope you guys can see there is a search symbol. If you click onto it, you see there is a left slide bar will come. And here there is a list of companies gets populated. Almost all the companies you guys can see, but they are not sorted based on alphabetic ascending or descending order. They are sorted based on the active nature of this contract. So you see the top company always on top. So I see this Bank Nifty, and it comes with the expiry price as well. Reliance, SBI, and Bajaj Finance. So if I look at this particular one, let's say I am interested in, let's say I take ICICI Bank. You can take anything. So what exactly happening here? See, this browser is actually scrolling day by day, and it is correspondingly changing the open interest. So the call option is populated here and put option is populated. I hope you guys can see the legend here. So I think it's made it available or not. So what you people see here, this line is the price movement. So as the price makes progress, how the open interest behaves on various strike price, it gives us a clue whether people are actually standing firm at the resistance or they are withdrawing at the resistance. So this goes bit advanced for someone to understand. So this is not going to be the explainer of that, but I'm just making you people aware that this tool is readily available for those who are aware of this particular analysis. So again, to summarize it, this is a call option and this is the put option. And you see there is a gray line here. This is the price movement on various days. So if you want to scroll, you can see, like, on 16th of June, the prices may be here. On 17th, it made a progress. And then on 18th, it shot up. And then it moved further. Then it is all the way here. And meanwhile, what happened to the price? So if you look at it, when it comes to this, the call options right from 9th, the 400 acting as a resistance, and one fine day, it shot up all the way upside. So sometimes you get early clues of the resistance and support by looking at this. Sometimes we understand the short squeezing can even happen by understanding this. So if you are a pro, you will find a lot more value out of this. But if you're a beginner, you don't have to get complicated with all these things, but you will anyway need it. When you need it, start looking at it. So there is a quick advice for you people before I conclude it. Be sure what you want to accomplish out of option chain, because this will save your time and it will tell you how to use your filters wisely. And point number 2, anything you learn in any number of videos, make sure that you use it. I think this video available to you through YouTube, so you may be scrolling various videos, but I strongly recommend you to use the video what you have learned now so that it remains with you. Anything which is not used, you tend to forget. So I strongly recommend you people to use the below comment section to share your findings for next 5 days about the option chain. So you can even simply present like, Murugan, I managed to figure out the stock looking resistance, or probably others can even comment about your work. So you guys can actually present it in the comment section. So if you want to master it, you have to practice it. There is no other go. So you got some quality time spent by watching this particular video. By any chance, if you're again interested, feel free to join any of our services that actually motivates us. And if time permits, we also post some advanced videos over a period of time. And do subscribe our channel. It matters a lot. And if you share this video, it motivates us. Hope to see you again.